There's two main factors, really. One is a fear of Xi Jinping's common prosperity drive, that he might suddenly take the assets of the wealthy and redistribute them amongst the less well-off. And then secondly, wealthy Chinese simply becoming fed up during COVID, what they see as an overreach of government restrictions and making plans to get out. So those two factors is what's really driven it. Singapore has always been seen as somewhat of a tax haven, certainly a wealthy destination, and it's got a huge finance industry. So it makes sense that as Hong Kong's financial position has declined, that Chinese investors are looking elsewhere.
Yeah. How easy is it for foreigners to set up life in Singapore?
Well, it depends how much money you've got. For $20 million, you can set yourself up a nice family office in Singapore, and that basically manages all of your investments. It means that you have a team of advisors, you even get your own CEO, and a bunch of staff members to basically handle your investments and distribute them amongst stocks, property, and get your kids into school. It's much more challenging if you don't have that kind of money. Singapore is really targeting that high-end consumer because it wants to drive its own economy. And of course, it also wants to avoid building some of that resentment, I guess, amongst the local population by having jobs taken away. So it's getting those investors in to try and create jobs while trying to make sure that the locals are kept happy. But that is a very, very tricky line.
Yeah, and I was going to say, you know, you've observed some impacts on life in Singapore, just the cost of rental, the cost of property, the way the streets are changing with high-end stores, sort of designer stores. How rapidly has that happened?
I think there's definitely been a noticeable shift in the past year, just in the sheer volume of extraordinarily extravagant cars, certainly the designer outfits right across the city, but also luxury condominiums and huge mansions, particularly on Sentosa and Island nearby. It's an interesting situation in Singapore because 80% of Singaporeans actually live in public housing. You can see some of them just behind me. So that most of the public is actually kind of insulated from some of these house price drives that we might see elsewhere in the world. But it's the 20% who might be able to invest in the private market, and they're starting to get squeezed by some of these investments. And that's making it tricky because those middle to upper class Singaporeans are also the ones with political capital, and they can put pressure on the government to make sure that some of those Chinese investments don't necessarily push out Singaporeans from owning property.
Yeah. So how is the government managing that balance of protecting locals, protecting jobs, as you pointed out, but still keeping these new arrivals happy?
Very much pushing this investment message that ultimately people who are coming in with $20 million or $50 million to throw around in investments in Singapore are going to hire local workers, and they're going to start startups, or they're going to build, there's lots of Chinese investment in sectors like bakeries, for example. That message is really driving home. It also doesn't hurt that Singapore's government has nearly total control, and frankly, it doesn't have to appease the population as much as in some other parts of the world. At the moment, it's very much that narrative of Singapore, a tiny island nation with no natural resources, just becoming a hub of wealth in Asia. And it's taking advantage of Hong Kong's demise, really.
Yeah, because Hong Kong is really suffering. And to that point, Eryk, what is the impact of this outflow of money having back in China and in Hong Kong for that matter? They have been hoping to refuel the economy through consumption.
They have, but it hasn't really happened. In Australia and in Europe and the United States, we saw, what was termed revenge spending after COVID. People who had banks of cash saved up were ready to go and splurge on holidays, cafes, clothes. In China, they're still pretty scared. They are not spending. They're holding on to those savings. The last data out last month showed that post-COVID spending in March was still lower than the last months leading up to the first COVID outbreak. You would expect in a normal situation people to really go out there and buy up goods, but it hasn't happened in China. And so people are still nervous and holding on to those bank balances. perhaps in case something comes around the corner, an unexpected event that might cause them to go into further economic distress.
Yeah, so that's going to hold back the Chinese. And of course, they are such a big economy, but if they don't start moving again, you might even see Xi, as you pointed out at the very start, cracking down on private wealth in China.
Well, Xi's really made that a point now of trying to redistribute some of this wealth. We saw big crackdowns last year on the likes of Tencent, Alibaba, huge conglomerate companies, and a push to really make sure that some of those companies didn't get too big for their boots. And what we're seeing now is the second stage in what, basically China's socialist evolution, where first it had to become rich. Now it can spend the proceeds of some of that wealth. And Xi very much was probably the most Marxist leader since Mao Zedong, believes in that future. And it has scared investors, and it has scared some of those wealthy families who are also the same groups of people who might not like Xi's authoritarian turn as much as some.
Yeah. Eryk, great to talk about this and your observations of the phenomena in Singapore. Thanks for joining us.
Thanks for having me, Bev.